Good morning and welcome to Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. And for this episode, we're going to take a look at the tax impact on real estate. Helping me do that, joining me at Nasdaq HQ is Erik Serras. He's a co-founder of Ideal Properties Group. Erik, thank you very much for joining me today. Before we get into that, tell us about Ideal Properties Group. It was founded 11 years ago with your partner, Alexandra Stepanovich.
Stepanovich, very close.
Okay, very close. Better than it was when we were prepping, right?
Definitely.
But tell us about Ideal and why you decided to launch the firm.
Well, we started, like you said, about 10 years ago. I think we needed more than we were actually getting from a different firm that we had worked in New York City. We needed more support. We needed more of an alliance between management and brokers. And we couldn't find it, so we decided to build it.
So I can imagine there was a lot of changes in Brooklyn real estate for sure over the past 11 years. Tell us about that, because I feel like people can't get enough when it comes to New York City real estate.
Well, Brooklyn's become a brand by itself, right? It used to be the baby brother of Manhattan. It's not anymore. People's first choice is now Brooklyn. So with prices being extremely comparative between the two, it's no longer the cheaper option or the second option or, you know what, let's just try to live in Brooklyn. Now that's where people want to be.
Well, you just opened your first office in Manhattan in the Chelsea neighborhood. What made you decide to branch off into Manhattan?
Well, we work with so many landlords who are incredibly built up in Brooklyn as well as in Manhattan. So we were really only servicing half of their portfolios. So we decided to really launch into Manhattan, be able to service the people we currently work with. And we're very, very excited to take on the Manhattan market as well.
What are your expectations for the real estate market in Manhattan and Brooklyn for 2018? Has it plateaued? Is there still room to run? Do you expect a sell-off in prices?
If I had the answer to that, I would be the richest man in the world. Right. We don't know yet. But what I think we're going to see is still very, very real strength on the residential market. I still think we're going to see a lot of great buying opportunities. Interest rates are still at all-time lows. It's still cheaper than ever to buy your home. Yeah, so that's what I think is going to happen. I think we're going to have a strong 18.
Yeah, I mean, even if you get another couple of interest rate hikes, it's only, another 50 basis points on relatively low historical prices. I can't imagine that impacting prices that much. But one thing I will say, this is a conversation we have in New York and New Jersey, the tax plan could potentially impact the real estate market. Do you think that could be the case?
I think in certain places it's going to across the country. I don't think it will in New York. I mean, the reality is a few $1,000s in either direction, which this actual tax plan will change things for people. I don't think is going to be the end-all be-all of whether or not they buy a home. I think the advantages still far outweigh any changes that this tax plan could bring.
I mean, even if you're looking at a multi-million-dollar home or an apartment in New York City, the couple $1,000s really isn't going to make or break. It's almost like buying a Ferrari and worrying about the insurance cost.
Very much so.
Right?
Yes.
Right. So
great analogy.
So you don't expect it to be that much of an impact, particularly on the high end.
I don't. I really don't. They can afford it.
Exactly.
That's the reason.
Right. Well, if the demand is out there.
And hopefully it will be.
All right. Well, thank you very much for joining us today.
Thank you, Jill.
And as always, thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.